evening to all. Myself Vaibhav. I welcome all of you to today's session of Visual JForex, in which we will be starting afresh with a new indicator. The name of the indicator is OBV, which stands for On Balance Volume. From the name, you can make out that this is an indicator related to the volume. We consider whether the volume is on the buying side or the selling side, whether the accumulation for the underlying instrument is happening or it is being sold in the market. So we will be considering the volume data in conjunction with the price data to look at the underlying price momentum for the given instrument. So let us head to the Visual JForex board, which has been developed by the Dukascopy Bank SA to make the algorithm development process easier to both understand and to execute. So here I have added this OBV block, and we have to define these three input parameters depending on which we will be getting this output value, which we then can use to set the conditions for the execution of the trade in a profitable manner. We will be not focusing on the technical aspects of the OBV indicator, how it is calculated and how it is derived. We will not go into the details of that. If you want to have more details on it, you will have to refer to the earlier session done during the introductory series. This will be more dedicated to the functional aspects of this indicator, and I will be also explaining to you a simple formation in logical terms which we can use for trading in the given environment. So let us now head to the Visual JForex platform, where we will see how we can utilize this indicator in a profitable manner to help us figure out the optimum trade entry points for the underlying instrument. We will be using the Euro USD as the instrument of choice for this session, and for execution we will be relying on the 15-minute time frame. Along with if you want to use multiple time frames, you can do that as well. And if you are simply looking to go with the lower time frame data, both aspects are fine. To filter out the noise, I will do that. I will take this 4 hourly time frame to figure out the major trend, and along with that we will take then 15-minute time frame to look for the optimum entry and exit point. So the formation is going to be simple. We will want to trade with the momentum, and for that we will be considering the OBV output value. And here we will not be concerned with the absolute magnitude of this OBV output value. Rather than that, we will consider whether it is going up or whether it is going down. If the on-balance volume is on the rise, that means the buying is taking place, and that means the underlying momentum is bullish. And if the OBV is in decline, then of course that means the momentum, the sentiments are bearish. So we will take this 4 hourly time frame and use this aspect. We will be comparing the OBV output values over the given period of time, and then we will move on to the lower time frame of 15 minutes to look for the divergence when we see that the OBV has started to rise but the price is yet to reverse. So that's like divergence. When we see divergence taking place, we can utilize the OBV data to act as the head up, or you can say lead indicator. And if we are looking at this possibility, this divergence, that is indicative of the fact that later on we are likely to see a price reversal, and that's what we are likely to see, and we will try to exploit that to our advantage. So here I will give you some examples where we see that this kind of divergence taking place. As you can observe, here we had the OBV rising earlier, and then the price reversal happened eventually. So if we look at the OBV and compare it somewhere here, say if we take this 3.15 GMT OBV output value and compare it to 115 GMT output value of the OBV, we will see that the 315 GMT OBV output is higher. But if we consider the closing value of this 15 minute with the closing value 2 hours back, then we will see that the closing value is still lower. So here we have this divergence, and eventually the price action catches up with the volume data, and we see these reversal of sort happening, and the Euro USD jumping higher, almost 100 pips jump here. Of course, not every time this is going to happen, and this is always probabilistic. So we will be looking to count on that, and we will be trying to exploit the situation to our advantage. Similarly, if we consider sometimes the sale opportunities might also arise. So here we have this instance where we have the price on the higher side, but OBV output is on the lower side over the interval of 2 hours. So we will try to go for the short sale opportunity here, and to make sure that we get into the trade only when the price reversal happens and not on the higher side. What we will do, we will place the order on the lower side for sale and on the higher side for the buy. So we will be using stop bid ask or stop ask data. So whatever is the difference between the closing value over the 2 hour interval, we will take that difference and we will place the order on the lower side by the same difference. So that will be for the sale, and for the buy, we will consider the difference, and whatever is the difference, we will place the order on the higher side. So only when the price starts to rise, the execution for the given order will happen. If the downward momentum continues, no trade will execute. So that's how this algorithm is going to work for us. So let us now head back to the Visual JForex platform. The formation is going to be fairly simple, quite easy to understand, and equally easy to execute. So first thing we have to do is get the instrument subscription done. And for that, we are going to need the logical components. So I will get if else statements first. Auto created variable, we will take default variable, default instrument, and default instrument should match with the candle instrument. Here we have to go for the instrument of choice, which is Euro USD. Okay, here it is. Afterward, we add the condition that there should be no existing pending open order on the system. So here we will define second input as 0. Only if there is no existing order in the system, new order will be placed. This I will change to 4 hours. And this will be changed to 1. We are going to need a couple of these OBV blocks now. This will be changed to 4 hours, and we will have the interval of 8 hours. So I will take the look back period of 3. There will be interval of 8 hours between these two output values of the OBV with the candle period of 4 hours each. And to pinpoint the exact entry exit points, we will utilize the lower time frame of 15 minutes each. And we will have 8 blocks of 15-minute each interval. So I will have to take the look back period of 9. Okay. And then we move on to the price action data. For that, we will utilize the historical candle formation. So we need info components now. Get historical candle. We are going to need 2 of 15 minutes and 2 of 10 seconds each. So I will add 4 of these blocks straight away. This will need to be changed to 15 minutes. Here also the back period needs to change. So this is going to be 1 and 9. So we will be able to compare the price action data over the interval of 2 hours. Okay, and to exactly pinpoint the entry point, we will then rely on the 10-second formation. So here this is going to be 10 second and one and two. Okay, so we have got these blocks in place using which we can define the conditions. So first we will have to devise the setup for the buy side of the equation, and later on we will deal with the sell side of the algorithm. We stop for the day here. I hope you have been able to understand the logic of the use of OBV, and then there is addition of the blocks for the execution purpose. And in the subsequent session, we will be figuring out the ways to define the conditions for the implementation of our logic. We will look for the formation where we will have optimum entry points for the system using the indicator OBV. So that's it from my side for the day. If you want to look at the further coverage of the market developments, do check out the Dukascopy Analytics page. We are also available on the Facebook. For carrying out the testing on the historical data, you will need the help of JForex platform. So all these links have been provided in the bio. Thank you all for joining in. See you next time around. Till then, goodbye.